Maheshwari as well joins in on the show right now. Nischal, hi, good morning. Let's pick it up from where our previous expert was talking about, the so-called new age tech companies. And Nykaa, really, the first time ever they've come out with a quarterly update, that coupled with the kind of stiff competition that Reliance Retail's platform Tira will also bring about. Wondering how is it that you're assessing Nykaa after the recent fall that the stock has seen?
Morning. Thank you for having me on the channel. So Nykaa, obviously, I think it is going to face some challenges because more or less everything is available on Amazon also. So it's going to be a tough challenge for Nykaa as we go ahead.
Right. The other surprise move, Nischal, also has been the TTK healthcare delisting, right?
Yes. That's been quite a bit of a surprise, actually. They have a long history on the exchanges, basically, and the company was doing pretty well. So we are a bit, but I'm saying at the end of the day, basically, it's the management call, basically, whether they want to continue with the listing or not.
Nischal, could you just talk about, the banking updates that have come in? You track the sector pretty closely. What is the sense that you get? Not talking about a HDFC or a IndusInd or any bank, but overall, what sense you get on deposit and loan growth and the commentary that's coming in?
So besides this, we have also talked to a lot of NBFCs, basically, besides the banking. I'm saying it's the secondary channel, basically, as far as banking is concerned. And the read through which we have seen from HDFC Bank, basically saying that that's a very strong growth still on as far as loan growth is concerned. It's there across the industry. So one is basically we are seeing across the industry loan growth. Secondly, we are not seeing much challenge on the front of the on the asset quality front across the board. So I'm saying one of the things we track is basically how many checks are bouncing for the NBFCs and the SFBs, and there the number is not gone up at all after as a percentage. Actually, it has fallen to the percentage to the loans. So asset quality is not coming as a challenge as yet. Yes, I think they have most of them will be absorbing this cost increases basically, given that the loan cost has gone up for most of the NBFCs as well as banks. So I'm saying NIMs are going to be under pressure, but I think that's pretty well discounted in the market.
That's the update coming in on some of those banking stocks.
Nischal, a lot of India strategists are calling out that Indian valuations are now fine after the recent underperformance, especially versus China, how things are looking in. How would you categorize the Indian market?
So yes, I agree with them basically that valuations have come off basically, and we are at around, if I look at 1,000 rupees of earning basically for FY24, Nifty I'm talking about, and so I think at 17,500, you are 17.5 times. I think long-term average is closer to this, so you are okay with that. But I think what is still the macros, that is the one question basically which I will still be bothered. What does Fed do basically in the current scenario about inflation? That doesn't seem to be coming off, and the drivers of that inflation still seem to be very sticky. Whether it is the unemployment rate or whether it is the wage hikes, they still continue to remain very strong. And I think today also we are going to have at least a 25 basis point increase by RBI. And the world over has to follow whatever Fed is doing. So I think that is the worry basically. And if you continue to have interest rate higher for longer, that is definitely going to slow down the growth. So now that 1,000 rupees earning, which I was mentioning earlier, that is the only thing basically which is going to, the question is whether it is going to get achieved or not. And that's why I'm saying basically wait for dips to enter the market. I'm more comfortable closer to less than 17,000 rather than actually trying and hurrying into the market now.
What's your outlook on L&T, given the fact that there has been some decent order wins just recently, as yesterday there was a 7,000 crore plus order win for L&T. Is it a standout performer within the space? Nischal?
Yeah, definitely, basically, because I think if you really look at it within that sector, basically, if you are a large cap player, there is nothing beyond L&T actually. They have a large order book and the executions are pretty good. Though I think there are concerns as far as the return ratios are concerned. So there are concerns on that, but I think otherwise it's a bellwether player out there as far as the industry is concerned, because the second player is like one tenth of them basically. I think the second largest player is NCC, which is around 10,000 crore, and L&T is around 1,50,000 crore kind of turnover. So I'm saying there's a huge difference between the second player and the first, and I'm saying so L&T still continues to remain our favorite in that sector, and we have a buy at these prices also.
Nischal, how would you look at some of these metal names? We all understand that prices of raw materials have gone up, and the finished good prices are not so high as they used to be, but their balance sheet has become pretty strong.
Yeah, I agree. I agree to that basically, because you are coming out of a very strong cycle. And but the issue still remains to be basically when you are talking about a possible recession in the US and Europe, though they are not as big a consumer as China and India, but still a significant portion basically. If they are facing a recession or recession-like condition, basically I think metals are going to be on sideways. So I'm saying the question is about growth. We have been negative on the sector for almost now 6 to 9 months. And we continue to remain negative. I don't see any. So there might be some few sectors within steel, basically, which might be doing better, like stainless steel. But otherwise, on a broad spectrum, I don't think so. We are going anywhere as far as metals is concerned.
All right, got the point, Nischal. In terms of metal, stay away for now, despite the correction or the sideways move that one has seen. Nischal, just in terms of mid-cap and small-cap, we've seen a recovery in the larger names so far in the last 4-5 days. Do you expect mid-cap to play a catch-up, or once again, those growth concerns will keep mid-cap valuation more in check versus the larger ones?
So even the mid-cap, small-caps have also been pretty strong. I think most of the people who own that, or the funds who own that, basically they must be doing bottom fishing, given that mid-cap and small caps have fallen quite a lot. So that is there. But if you really look at it from the macro side, historically a rising interest rate or a high interest rate has always been negative for mid-caps and small caps, because the availability of capital basically starts getting squeezed out. And that's what is happening at the moment. Their cost definitely, both on the terms of raw material as well as on the cost of capital, all will go up basically. So I'm saying there is going to be challenges. Again, on the demand front also, we see challenges. So I think you have to be very, very sure about what mid-caps you are into and what kind of scenario and outlook that mid-cap has. So can't be brushed with one, can't be painted with one brush actually.
Nischal, what do you do with IT? I mean, one was talking about KPIT Technologies at a 52-week high as of last week. And then, of course, that brokerage downgrade came in and you saw that knee-jerk reaction in the stock. Yesterday, I was looking at the screen, Coforge, LTTS, all were holding out well. And from, of course, next week, you'll have the IT numbers as well trickle in. You think the worst is behind us for IT, or would you wait it out this quarter, see what the management commentaries are, and then perhaps take a call?
I would like to wait actually. I'm not very positive as far as IT is concerned, given that you have challenges as far as growth is concerned in the US and Europe, which are the large two consumers. If you see most of the companies, 80 to 90% of businesses in these two geographies, and if both these geographies are going to face challenges of growth, I don't see how IT is going to do well. So I think we have been underweight IT. I think we should continue to remain underweight. Now, whatever we are seeing of yesterday, basically, there's mostly, I'm saying this is a trading bounce. People shift from one sector to other. One sector becomes cheaper than others. And that's a way, basically. And yeah, I agree with one thing is basically it's a good hiding place, because obviously very strong cash flows, good quality management, strong balance sheets. So yes, all those things are in favor, but growth is not there. and that's why I'm worried about it basically. And I don't see there is going to be any positive commentary as far as this current quarter is concerned.
Would like to take the moment to thank you. Thank you so much for taking the time out and joining in today.
Thank you.